Hi everyone, my name is Piterpakulski. Today we will start a new financial model. This will be a street food spot, but we will create a little bit more interesting financial model. We will be creating a chain of street food spots, and they will be different by type of location, by average check. We will be opening different street food formats in timeline, so this will be a very interesting group of videos, so I hope you will enjoy it. You may give us a like, subscribe. You can order financial models from scratch for your unique business ideas. We can help you with that. So let's start with creating the basic things. So first of all, we will set up the first year of our financial projections. So this will be the color of all inputs in our financial model. All other cells will be automized. So we will have a 10-year horizon. The next step will be creating the list of months. We will need this list when we will be setting up the moment, for example, when we'll be starting operating activity, or when we will be setting up the moment when we get a loan. Then we will set up the list on-off statuses. We will need this to include or exclude from calculations different types of street food spots, so we could see the project with or without revenues and expenses for this or that type of street food. So these are basic things. Then let's street food spot types. So the next step, we will be specifying our spots, types of spots. So here will be so let's assume type 1. So let's assume that we have 6 types of spots. We can assign them some names, for example, but these will be we will be creating the portraits of these spots, because the amount of spots and types we will be setting up in specific table of inputs that we will be creating a little bit later. So here are the types of spots that we will have for inputs. Then the next step, we will be on off. So the next step, for future scenario analysis, we should be able to include and exclude different types of street food spots from calculations. And for that purpose, for scenario modeling, for quick scenario modeling, we will need to create these buttons. So when the whole financial model will be done, we will want to we will see the cash flow statement, we will see simple discounted payback period, we will see net present value, internal rate of return, and then we will start creating different scenarios. For example, we see that this portrait of street food type is too optimistic. We will just switch it off and see what will be the payback period with or without this type of street food. So then we will write a very simple formula. If this equals to this, then we will put 1, otherwise 0, to explain Microsoft Excel that we will count these inflows and outflows. If here is 1 and 0 means 0, so all revenues and expenses will be multiplied on 0. So the logic is very simple. Then we will need to create average check. So check will be nominated in dollars. So our different street food spots may be located in different locations, and because of that the average check may differ. So for example, just a moment, let me, so for example here will be $10, 15, 20, 25, 30, 35. So let's say these are the basic average checks for each type of street food spot. Then we will use some coefficients for that story. Average check, local coefficient, then global coefficient, and then average check final. So this will be percentage format. So the basic value of this coefficient will be 100%. This is the input, so we mark it with blue. Then global coefficient that we will use for all types of checks. This is also the input. So we are creating format cells, alignment, center, okay, and then the final value of the check will be this multiplied this and multiplied this value, and we are locking this value. So now what we get in this case? So first of all, we want to exclude this type of spot. So here we get the revenues. See, we can see not the revenues but the final value of average check. Or for example, we don't want to exclude it, but we want to see just what will happen to the business ID if we take 50% of this average check. Or for example, what will happen to the business ID if we increase the all average checks on 20%. So we will need all this story for future scenario modeling, because it is vitally important when you get the final diagram of simple payback period cash flow statement. You will see how much financing you need, and then you will start playing with all these input parameters. So this is the first step. This is about the average check. So the next video will be about direct costs and so on. So if you find this video valuable, you may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. So see you guys in next videos. Thank you and bye.